let me roll our nice little special guest video. Danielle, what's up? Welcome to the Power Hour. Thank you for joining us today.
Of course. Thanks for having me.
And it looks like you have a fish tank in the background.
Yes, I do. It's a saltwater tank.
Okay. Can you take us through what we're looking at in the tank?
Definitely. So I have a blenny. He's pretty awesome. A couple different starfish. And right now I'm working on getting a couple more because one of them actually jumped out of the tank. But
wait, the starfish jumped out of the tank?
No, it was a goby, actually. He tried to escape. So I'm a little low on fish right now, but I have some more coming.
Wait, what's a okay, hold on. I think we're all Googling this now. Goby fish. Okay. All right. Wow. That poor little guy jumped out. Okay. There's the screen. There's a goby. Did I spell it wrong initially?
No, that's right. My son picked him out. It was a sad day.
Google helped me a little bit, but all right. Well, you know, we'll get some more goby in the tank, I suppose, for next time you're back. But Danielle, why don't you go ahead and get us started? You sent over some market thoughts, and maybe give us a little bit of background on yourself as well, and let's just dig straight into it.
Sure. So I'm Danielle Shay. I'm the VP of Options at Simpler Trading. I primarily trade in a directional momentum style. Trade a lot of options. I definitely buy and hold stocks as well. And you can find me in the Simpler Trading trading room. And I also have my own options picking service. So mainly all about options and directional.
Awesome. And when you say you're trading options, like what sorts of option trades are you making? Like, are you selling credit? Are you sort of picking stocks with them and buying, calls or puts outright? Tell us about that a little bit.
So it really just depends on the overall market condition. When the market has a little bit more momentum, especially like what we saw in January and last year, I was definitely buying a lot more long calls. Okay. But right now I'm doing a lot more multi-leg option strategies. So I'll buy butterflies, I sell credit spreads, I'll sell naked puts, just stuff like that, just due to the volatility.
Okay. Awesome. All right. And I guess, but before I ask some questions about that,
sure.
Down some notes. Tell us where you're at with this market. You said your option strategy depends on how the market looks, what you're seeing in the market. So what are you seeing today, these past couple of weeks, et cetera?
Well, it's been pretty volatile, as I'm sure you know, and your members know. And so for that reason, I've really been focusing on using strategies with wider ranges. When you're just buying long calls or puts, and then you have these situations where, one day the market's up 4% and then it's down 4%, it can be really difficult to trade with just long option strategies. And so for that reason, I'm using a lot of butterflies. I mean, basically right now, we just have the NASDAQ stuck inside a range, right? We're stuck between the 100 and 200 simple on the downside, and then you've got that overhead resistance at the 50 simple. But in good news, because we're consolidating and because the NASDAQ has been a little bit of a laggard, I mean, I am looking for the NASDAQ to eventually break out of that consolidation. And I'm personally betting on it going to the upside, even though it looks a little bit weak right now.
Woo! All right. More bull times ahead.
Fingers crossed.
Fingers crossed. Yes, I think we'd all be glad to hear that. Okay, and then what about small caps? I mean, the Russell has been getting hammered, and today is another one of those days, down about 2.5% almost.
Yeah, and honestly, this is just how this market has been. One day up, one day down. The Russell right now, because it's broken down below that 50 simple over the course of the past week or so, it doesn't look as good as it previously looked. But because of the relative strength that it has, I am still looking for some more upside there. I mean, there's a couple different stocks specifically that I like. I like MDP, Crocs, Yeti, Sonos. These are some small caps that I think are pulling back and look pretty good. But I mean, the main concern for me is just all of the high beta names. A lot of the names that have been really strong throughout last year and the beginning of this year as well. At first, when we started seeing the sector rotation coming out of them, I think everybody was waiting to buy the dip. And at this point, it just isn't really clear that it's going to actually go higher after the dip. So I think my biggest concern right now is just those high momentum names, especially a lot of the COVID names that we've been trading.
Okay. And you named a couple small cap stocks that you like Meredith, Crocs, Sonos. Those are three that I caught. Any of them that we can dig into a little bit deeper and talk about?
Yeah, sure. So what do you want to do? Set up some trades or just...
Yeah, let's do it. I love setting up trades.
All right, let's do it.
And if you have a screen to share, you can share it too. Otherwise, I can keep control of the screen.
Oh, sure. Yeah, well, okay. I see. I haven't used this streaming platform that you have. It's pretty awesome.
Yeah, it's pretty simple, right?
All right, let me see if I can figure that out.
All right, you can do it. And check this out. We got a new soundboard today too. It's got like 100 sounds on it. I'm sort of just working through it. Let's try this one.
Shots fired! Shots fired!
All right, that's a decent one. Okay, that one gets the pass. I said later in the show today, if we have some downtime, we're gonna let the audience vote on which sounds we keep and which we kill. So some nice things that come with the streaming platform.
Awesome. Yeah, no, I mean, I really like it. It's great. All right, I got my screen shared.
Yep. All right, we see it.
All right, so looking at Sonos here. First of all, I like Sonos. Do you have any Sonos speakers?
Yes, we do. And I can't really point my camera up. In this office, in this Benzinga HQ, Detroit, Michigan, we are fully Sonos surround sounded through the ceiling. It's pretty cool.
Well, perfect. So if you're like me, I mean, I like to buy stocks of companies that I actually like, right?
Yep.
But the reason why I like this one here is because you see that last quarter, you had a really nice breakaway gap that never came back and filled. Well, I'm sorry, 2 quarters ago, actually. And the quarter before last, you had yet another breakaway gap. And so typically when I see that pattern and then I have another earnings
And these
report,
are daily candles that we're looking at, I assume?
Yes. Yeah.
Okay.
5-year daily chart. Mm-hmm.
Okay, perfect.
Yeah. And then you can see how there is an earnings report coming up, which is going to be on May 5th. So typically when we have this pattern, I'm going to try to get my drawing tool, where you have those 2 breakaway gaps in a row, usually you're going to see a rally into the next quarter's earnings report because people are going to be anticipating that they had such a great report twice in a row. And so typically you're going to see it rally into that level.
Okay. And earnings date is, find my trusty Benzinga Pro here. All right. So it looks like it's going to be early May.
Yes.
Does that sound about right?
Mm-hmm.
Yep. Okay. So May 5th, that's the estimated date per the Benzinga news team. Okay. And so basically the stock has gapped these last couple of earnings reports. And so the bull case for the stock is that we'll probably see a run up into this upcoming earnings report. Is that a fair summary?
Yes.
Okay. All right. I like it. And then is there anything that you could see on the chart that would make you bearish on the stock? Like, are there any levels you're watching that, hey, if it drops below this, I'm bailing, etc.?
So usually I use the 50 simple. With the volatility as of late, 50 simple has been we've seen some price action right around it on a couple different key stocks, but that is typically the level that I use in a trending market. I would say really the 100 would be a pretty key line in the sand that if we really see a breakdown and a shift below the 50 simple, and then you also have, your candles trading below here, then that's kind of the point where I wouldn't look at it any further. I think my main concern with stocks like this right now is just what I was saying about the kind of the high momentum names is that a lot of them are really starting to break down. But this one, even though it is down 3% today, it really has just pulled back to the 34 EMA on a daily chart. So, I mean, it's really not it's not a deep pullback by any measure, and it's a great viable level for me.
Okay. All right. I like it. One trade idea already. Can we do another one?
Sure. Which one do you like? Yeti?
Let's do Yeti. I don't know if we've ever talked about Yeti on this show. It's a good one.
So I like Yeti. I own the stock, and I also have a ton of ton of Yeti. I have a Yeti cooler. I've got the mugs and everything. I'm out here on the lake, so I use it all the time.
Okay.
So I'm a huge fan of that. But I really like on this one, same thing. You've got the pattern where you have an earnings report coming up. On this one, on the daily chart, it does look a lot sloppier than what you're seeing with Sonos. But because of that sloppiness, I use what is called the squeeze. You ever use the squeeze?
No. What's a squeeze?
So the squeeze is just a consolidation breakout pattern. So it's going to be this guy right here. Basically, when these bars light up, you see you have white, 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 and red. That just means that the chart pattern's consolidating and it's likely to break out. So the last time we had one, it went from $50 a share.
So what is the squeeze an indicator of?
It's consolidation breakout. So basically saying that the ticker is consolidating, and if it's a trending chart, then it's likely to break out in the direction of the trend. If it's a non-trending chart, then it's kind of a toss-up.
Okay.
So if you look at, the last one right here, it did trade higher in the direction of the trend. And since it's been consolidating around this $70 price point, basically I'm looking for it to make the next leg higher. So that's a daily chart. If you look at it on a weekly chart, it's also consolidating on the weekly chart as well. So when I have a chart that's been consolidating not only on the daily, but on the weekly chart and building up that momentum for a while, then I'm looking for that eventual momentum breakout.
Awesome. And yeah, we hear from a lot of people who like these sort of sideways charts with the expectation that it's going to break. It's been stuck for a minute. It's going to find its time. It's going to have its day. And finally rip higher.
Yes, and that's exactly what kind of tickers I trade. Primarily though, it has to be a ticker that is moving in the direction of the trend. I mean, it can't just be, a chart that's been trading sideways for a year going nowhere. I really like to look for relative strength names. So anything, that's going to be up when the market's down, or perhaps not down as much when the market's down. I also like to look for ones that are holding the key moving averages on the daily chart. Definitely the 50 simple is a pretty key level, but as you can see, the 50 simple on my chart is going to be this yellow one. So you can see that it has traded above and below it, but I really just kind of equate that to the amount of time that it's been in consolidation. And it's still holding this 100 simple. So for me, that's still, a good tradable chart. And with the earnings report, it's all the way out in May. So we have some time there. That's one where I wouldn't really mind buying some long calls on it. But I mean, I do own the stock, and I do think that it's a good spot to add some more stock as well.
So would you buy, and are you suggesting like if you were to get long the stock via calls, you're picking an expiration that's before earnings or afterward?
So if I'm going to buy the calls, I like to buy the calls in the earnings series because I like to capitalize on the rise in IV going into the report. And then if I'm going to buy the stock, I just like to buy it obviously as low as I can. So when I get a pullback, I typically buy it at the 50, and it's sitting right on the 50 right now. So that would be a good spot for me to either pick up the stock or the long calls. The thing about the run into earnings typically is it usually works a little bit better on a 21-day time frame prior to the report. So we're still a decent ways away from entering a 21-day time frame. So I would just say it's a little bit early right now for the actual options trade.
Okay. And let me ask this: when you're getting long a stock via calls, generally speaking, what goes into your thought process for picking out the strike price?
So first thing that I'm going to do is I'm going to decide, is this a run into earnings or not? Because pretty much all of the trades that I'm doing right now are going to be trades where I'm looking for a run up into an earnings report just because of where we are on the calendar. And so if that's the case, and if the company has a report coming up in the next 21 to 34 days, then I'm definitely going to be buying the long calls in the same series in which it reports earnings. And that's because you're going to see that rise in IV as well as hopefully a rise in price. So sometimes, if you're wrong and it trades flat, the price of the options are still going to go up because the implied volatility is rising going into the earnings report. So that's why we do it that way. And the next piece of that is I'm going to look at the delta. So for example, if we were looking at the Yeti trade, this is going to be the series in which they would be reporting earnings. And then after that, I'm going to look for usually around delta 70 to delta 50. So that would give me a range. Here, let's see. Let me get the box on there instead of that circle.
And your drawing abilities on the screen are unreal.
Oh, thank you.
Like you got like the free pen, you've got the ovals, you've got the squares. I think you might have a future in creating NFT art. It's been the hot thing. You're very, very competent in the drawing on the screen. So I'm thoroughly impressed.
You. Well, we have a trading room over at Simpler Trading, and so I'm used to presenting in this format. So I think it's really awesome, the format that y'all have, because I definitely like to draw on the charts. I used to be a teacher, so it's kind of something.
Okay, what'd you teach?
I used to teach elementary school, 6th grade.
Oh, that's awesome. Okay, very cool.
So anyways, basically what I do is I'm looking for a delta anywhere between really delta 40 and delta 70. I also like to look at the volume and open interest with something like Yeti, especially 53 days out. It's going to be, there's not a ton going on here, but there's still a couple hundred contracts per strike, which is going to be fine for me. I'm also going to look at the spread. If you have a spread that's wider than, I would say, about 75 cents, that's when I really don't want to be getting into buying an option, because it's going to make it harder when your spread, like if your spread's like $2 or $3 wide, you're just not really going to get a good price on the way in. You're not really going to get a good price on the way out. So that's a time where I would pass. So I'm looking for the spread of 75 cents or less. And then I look for the price of the option. So a lot of the trading that I do is focused on kind of building small accounts. And so usually when I'm looking for a delta 70 call, I want it to be about $10 or less. So this would fit the bill. It's just a little bit early for me because most of the trades that I place usually are on a time frame of about 2 to 3 weeks. But that's why I would just buy the stock here and then, kind of wait. But for people who like trading options on a longer dated basis, I think it's a good trade. I just like to get in and out a little bit quicker.
Yep. No, I hear you. And I definitely will sometimes do that. I'll go like 2 years out on options sometimes.
Really?
Yeah, not so here's an example. Okay, Ford, ticker F. That was like my big bull bet going into the year. And basically the thesis behind it was on the number side of things, the multiples were fine, right? The stock trades in line with the rest of the industry. So if I'm wrong, I'm not going to get cracked on it. And then the thing that I liked about it is that the company signaled to us that they're going to spend a ton of money on EV platform, right? Specifically marketing their EV platform. They have their first products out. They're just going to advertise it a ton. We have a lot of what I call EV energy, right? Where we've seen like these Neos and Teslas and all those EV stocks, especially, in the latter half of last year ripping. And I'm like, okay, you know what? I'm going to take this bet on Ford. I'm going to go way out. I'm going to buy what did I do? I did the 2022s. The January 2022s, and got the $12 strikes, back a few months ago. So those are the scenarios where, I really don't have a ton of idea on timing for that, other than the company said they're going to spend a ton of money on marketing EV this year. And so that's why I chose to go way out on that one.
I like it. I mean, I like the Ford play. I think that they've done a really good job climbing off of the lows. You have that pullback and consolidation right into the 50 that I like to see. You do have that earnings report coming up as well. You got that consolidation. I love when you see a nice pullback to that 50 simple and then you get a wick on the bottom like that. Just shows, buyers are coming in, they're confident on the stock when it's pulling back. So I like that a lot, and I think it looks good for an options trade right now too. I like your idea going all the way out into next year. If I was going to set something up,
another Ford bull. All right, I'll take it.
Well, I do like Ford myself as well. I mean, I have 2 of them. So
all right, there we go. All right.
I like them. I like your whole EV analysis. I think on this one, I think I was looking for a spread. There's just not really a lot of juice in here for me to do a spread or anything like that. But I mean, I like the options out in this April 28th series too for a shorter dated trade. What's your price target on it? Do you have a target?
No.
So
No, not
I mean,
really. Basically, I've been, you know, when I had the momentum, right, I sort of had this philosophy of let it ride. When I saw the momentum start to crack a little bit, as we have in the past few weeks, I started selling covered calls against the stock position that I have in it, right, generate some
Yeah.
income. I'm fine getting taken, right, if it's a 50% run in 3 months, I'm fine if my shares get taken away from me. So that's how I've been playing it.
hey, I like that idea. And I mean, for something like this too, that's so cheap, I mean, you could even just sell some naked puts down here if there's any premium. Let's see. It's not a whole lot of premium, but you could do it if you wanted to pick up some shares. But yeah, I mean, I like the stock. I like the pick.
There we go. All right, and another one for Ford. And let me ask you one more question.
Yeah.
You talked about butterflies a little bit.
Mhm.
Can you just take us through the butterfly trade and when and why you like using them?
Sure. So I'll go ahead and use Microsoft as an example. I have a butterfly on this one right now, and I'm going to be adding some more. Basically, the reason why I like to use butterflies is because when you are just buying a long option, I mean, you're just buying that premium, right? And so when the market explodes to the upside, that's perfect, right? But when the market is just sitting here and it's just trading higher, lower, higher, lower, higher, lower, that's basically like death for a long call, right?
Yep.
So,
Time decay.
huh?
You just got that nice little time decay going against you.
You got the nice time decay, yes. And so for something like this, where I have a specific price target, if you're going to trade with Butterfly, you have to have a specific price target. But what I do is, number one, I use a lot of Fibonacci. So here's my Fibonacci 1272 extension level. That's going to take me right to about 252. Let's call it 250. So I like to look for a confluence between Fibonacci levels and then a key psychological value. So 250 is a pretty good number. I also like it because it is just right above the previous all-time high. So when and if there's a breakout on this ticker, it's likely going to go and retest that previous high and then go to the new all-time high. So first of all, setting up a butterfly on Microsoft, I like it because it's in the consolidation, because I have a pretty decent target, I feel like. Yep. Also because you have a run into earnings coming up. So Microsoft historically, it does really well on the run into earnings. And so usually every quarter, I'm going to go ahead and trade that because it's just one of those things that, and let's see, I have another grid right here that I can show you.
Oh, and I'm looking at Microsoft EPS right now. They've beat on EPS, they've beat 19 quarters in a row.
Well, exactly.
Holy
Exactly,
crap.
right? And so this is another grid that I have come up with. I call it the earnings hot zone, but basically it goes and kind of calculates those numbers. So this grid is actually only looking at 8 quarters, but I mean, you can make it look at as many quarters as you want. Usually I look at the last 2 years. But on average, you've got an earnings move of about $10 in the 21-day period prior to earnings, which is about 4.5%. And then these bars right here, they're color coded to show, okay, did Microsoft trade higher 21 days in advance? If it's green, yes.
Yep.
And so if you look at the zones, I mean, historically, that's what it does. So with this one, I set up some butterflies because of all of those reasons. So typically what I do is I place my long call right around where the price is currently trading.
Okay.
And then I place the short calls. Oops, that was a little messy. These are going to be the short calls right up here at the target. And then you have another long call up here because that's just your protection so that you're not short too.
Yep.
So the reason why I trade the butterfly is because when the market's just chopping around like this, it also works really well in a directional environment. You just have to shorten the time frame. Is because this long call is kind of decaying while it's doing nothing, but it will eventually make you money as price trades up into your zone. But while the market's chopping, you have two short calls that are staying out of the money. And so those out of the money calls are decaying, which is making money. And then this one is not really doing too much until price takes off. But the goal here is to keep the price from between where you are right now, which is 230, up into the target zone. So if you have a ticker where you have a decent idea as far as, okay, I think it's going to stay above this level and I think it's going to stay below this level, then you can basically just set up a butterfly using that target zone as your target. So I mean, you could do it on Sonos.
And how far out do you typically go when you're setting those up?
I usually only go about 3 weeks, but because of the volatility as of late, I have been going about 4 or 5 weeks, just because when you're in a directional market like this, it's really, really easy to do them so that they're expiring the next week and the week after, because you wake up every day and the market's like, oh, goes higher, goes higher, goes higher. But when you're a little bit choppy, it takes a little bit longer. So I have been doing them a little bit farther out. But I mean, for example, if we were going to do it on Sonos, I wouldn't want to do it in the earnings series. I would do it probably the week before.
Okay.
Looks like you can't actually, sorry, because we have monthly options only on this one. But normally I would just do it. Huh?
Come on, Sonos, get that market cap up so you can get some weekly options on this thing.
Exactly. So, I mean, same thing. I would just set it up. I would look for a confluence between that target. You've got 45 aligning. See, look at that. 45.88 is your fib level, aligning with the key psychological value, which is just right above the previous high. So if you set up a butterfly where you're targeting that 45 zone, and then you put your long strike down here, your short strike here, and another long strike up here. Basically, you are making money on your long as long as you stay here, and you're making money on your short as long as you stay below here.
There we go. And if people want to learn more, they want to stay in touch, how do they do that?
Yeah, so you can follow me on Twitter. Trader Danielle is my handle. And then also I have a free webinar coming up on Wednesday evening this week. And you can find the link at simplertrading.com/repeat.
And what are you doing on the webinar?
So on the webinar, I'm going to be talking about the run into earnings. It's really one of my favorite quarterly setups that I use. There's a lot of different setups that I trade. I mean, I trade the consolidation breakout. I trade the short squeeze. But this one is just based on the calendar system where you're looking for key tickers that are running into earnings. So this webinar is going to be about the run into earnings.
All right, there we go, guys. Earnings season is coming. Don't be left out of strategy or just guessing. Be strategic about it. Producer AB is going to get both of those links in the chat, both for the webinar and for Danielle's Twitter. Danielle, thank you so much for joining us. You gave us some awesome lessons here. You also showed us some stock setups. I don't think we could ask for anything better.
Thank you. It's been awesome.
Absolutely.
Have a great day.
You as well.